secret way to place strong support and resistance level. I'm back to make a lot of videos. Subscribe to the channel and click on the notification bell to be updated. First, let's start with the foundation. What is the level of support or resistance? It is a level or area where price has bounced from multiple times in the past, like on this chart. We can see one time here, second time here, third time here, and then it breaks, and then it rejects in the opposite direction, and then it re-breaks it and reject again. So when a level has this type of rejections in the past, we expect it to bounce again with good chances in the future. Note that we are talking about probability here. No level will work all the time. Learning how to place the most powerful level of support and resistance on your chart permits you to forecast with high probability where the price is likely to bounce from. Hence, it permits you to get into very profitable trade once the price confirms your entry. Reference point. Let's see now what elements I use to place my levels. Be ready because you won't find those information anywhere else. First, use higher time frame level. Draw your level from a higher time frame. In this example, we take a level from the monthly chart and then we trade it on the 4-hour chart. It permits us to get 3 times our risk on this specific trade. Second, use a support as a support. Here is the support line. We can see 5 rejection when price is above the level and bounce from it. Once price broke below and price come back to this level, did it act as a resistance? No, it didn't. But once again, price broke above the level and it reacts 2 times more as a support. Use a resistance as a resistance. Here is a resistance level. We can see it clearly bounces 3 times out of it, then broke above, and came back to retest it. Did it react as a support? No, it didn't. But once again, once it broke below, it rejected 2 times as a resistance again. Third element, use most recent swing highs and low. As you can see on this chart, price made a downward swing, and the most recent swing high right here created a huge rejection. 4. Using line chart and extreme spike. This is a regular chart candlestick view. Then next to it is the line chart. I used to place the first level at the line chart level, then a second at the extreme of the spike level. Fifth element, following the trend using the Dow theory. On this chart, price moves up, which means we want to go with the strength of the market and buy. In this chart, price moves down in a downtrend. So in this example, we want to sell. 6. Several bounces from the same level makes it stronger. 7th element, entry and target profit. Once you draw your level, you will always need a price action confirmation to enter the trade. Stay tuned to know how to enter those trades. Now let's look to a deeper explanation of each point on the charts. If you like this video and want to learn more, you can join my student, and I will guide you to become profitable faster and help you save your investment. Contact below. First element, use higher time frame level. You probably hear on other YouTube channels that you should draw your levels of support and resistance from one time frame only above your trading time frame. Let's look on the chart and apply this specific concept. This is AUD/USD for a chart, that is the time frame that I will use to enter my trade. Then, to draw my level, I would go to the daily chart. This is AUD/USD daily chart. I place the first level on the top because there is a nice rejection on the extreme left plus one in the middle. The second level is based on multiple rejection on the left side plus a little one most recently. The third level is a nice level bouncing several times on the left. The fourth level is based on 3 rejections and 1 very recently. And the fifth level is the extreme bottom with a V-shaped formation there. Now let's move on to the forward chart. As you can see, the levels are a bit too close from one another. The distance between each is very close. This means that if you enter a sell trade here on the forward chart with your stop loss here, and you use the daily levels as possible target profit, you will get your first possible target at only 0.5 times your risk, and the second will be only 1.5 times your risk. Since you are expecting the price to bounce from this level, those are areas where you likely want to place your target. To be profitable on the long run, it is better to win 2 to 3 times what you put at risk. So those targets are simply not enough to make you profitable on the long run. Other element. On this move, for example, price has passed and broken 3 levels before finally reversing on the forward chart. On this other move, we can see that price has passed and broken again 3 levels before finally reversing. It gives us a 25% probability of success for reversal at those levels. It's not very exciting. To get better odds, you need to use a bigger ratio. From my experience, what works best is to get a level of support or resistance from 3 time frames above your entry time frame. Back to AUD/USD forward chart where I enter my trade. To draw my level, then I would go to the monthly chart. On this chart, my first level would be here because of 3 rejections on the left. Then I have this nice level of support based on 1 recent rejection and 2 rejections as a resistance. Then I have another level of support based on 2 rejections right there as a support and 1 rejection 2 months ago as a support as well. Finally, I have this level of support right there based on 1, 2, 3, 4 rejection as a support. Once those levels are placed, let's look at the forward chart. Those levels now, as you can see, are quite far from one another. Which means that if you enter a buy trade here on the forward chart with this inside bar pattern and a stop loss of 40 pips, and you use the monthly levels as possible target profit, it will give you 260 pips, 6.5 times your risk. And there you can really expect the price to bounce from those levels. Let's look concretely how much money you could have made on this move. Let's say you place 2% at risk in this trade. Every time the price makes the same amount of pips in your direction, you make 2%. And when you arrive finally to the monthly level, you could have made 14% of your account profit just with 1 trade. Then, if you enter a sell trade here on the forward chart with this engulfing pattern, a stop loss of 50 pips, and you use the monthly level as a possible target profit. The distance between your entry and the target is 230 pips. It is more than 4 times your risk. That's a lot of money. And if you place 2% at risk on this trade, you can see that you make 2, 4, 6, 8 and around 10% of your account on this specific trade. Thank you for your patience. If you want me to do a video on a specific topic, comment below. Second element, use a support as a support. Back on the AUD/USD monthly chart. Let's take this support line here. Multiple rejections as a support. When price rebroke above it, price then doesn't reject those levels of resistance. Aside, it goes to reach the nice support level zone. and reject from it. Now let's look at using a resistance as a resistance. Back to AudioSD monthly chart. Let's take this support line here again. When price broke below it, then it doesn't reject this level of support before falling. Instead, price goes to reach the nice resistance level zone from here. And then, when it comes back later in the zone, it did it again, disregarding the support level, since the price was below, and reaching the resistance level, taking a resistance as a resistance, and not a support as a resistance. Of course, some levels or zone can be both support and resistance, but I would take them both ways only if I have historical data that shows rejections in both directions. In my approach, I never assume that a level of support will transform into a resistance, and this concept saved me from a lot of losses. You like this video? Click on the like button so I can make more. Third element, use most recent swing high and low. Back to AudioSD monthly chart. Let's imagine this part doesn't exist. And let's look into the last swing high in this downtrend. The first significant swing high is here. The second significant swing high is here. And the third significant swing high, most recent, is here. We go now to the forward chart to see how price reacted when it first came back there. The vertical yellow line on the left represents when we would have drawn the level. And this is the first time price tested the most recent swing high in this downtrend monthly. Let's zoom into this move. So this is a zoom in on the forward chart. First trade. Here, at the first time price touched the level, there is a pin bar creation. We could have entered at the break of this pin bar with a stop loss right here and a target profit right here. This move would have made 110 pips, which means 3 times our risk. Then price came back and gave us a second trade. In this trade, it created a very beautiful large pin bar. If we take the end of this pin bar as our entry point and a stop loss of 70 pips, we could see that price has made 210 pips already, which means 3 times our risk again. Now let's look at the first time price tested the second most recent swing high. So this is a forward chart, zoom in at the first touch of this level. In this example, price made an inside bar and a pin bar, and we could have entered at the break of this inside bar. Our stop loss would be 42 pips, and price made 177 pips. This means minimum 4 times our risk. Now let's move to the third most recent swing high, first touch. When price come back to it, it made a railroad track there. We could have entered at the break of this railroad track with a stop loss of 39 pips, and it would have made 340 pips, which means 8 times your risk. If you place 2% there, you just make 16% out of it. Let's come back to AudioSD monthly chart. Now let's look at this level, which is strong with multiple touches, but not the most recent. We go now to the forward chart to see how price reacted when it first came back there. So right here, this is a daily. To zoom in a little bit, this is the first time the price tested this older level. Now we are on the forward chart and let's see what happened. As you can see, this time, price just broke the level easily. There was no possibility to enter. In this chart, the 3 most recent swings high following a downtrend provided us with winning trades and 3 rewards minimum on each, while an older level didn't work. Not all of them will work, but the most recent swings are very powerful, especially from higher time frame like the monthly chart. Go on your chart now and make an opinion for yourself. Let me know your thoughts by commenting below. Fourth element, using the line chart and the extreme of the spike. First, using the line chart. Japanese candlestick view, as you can see, can be confusing to place a level. But when you switch to the line chart, this is the same chart, but line chart view, here no candles with different color or spikes to confuse us. If we place an horizontal line here, for example, it is very obvious that price rejected this line area many times. Same for this one right here. Same for this one with 3 bounces clear at the same level, and finally same for this one right there on top. A tip about the line chart. Let's look into this level specifically. Once I have placed my level there from the line chart, I will confirm them on the candlestick chart. As you can see, my level from the line chart violates this bearish candle. So I will add a line on the opening of the bearish candle right here. Because some platform uses the opening of the candle to display the line chart and some other uses the close of the candle. The line chart might differ from the platform of a big player and yours. Having this element in mind and having experienced that those levels works as much, I prefer to place both. Second part of the fourth element, using the spikes. Additional to the line chart levels, I like to place a level at the extreme of the spike, and I do it this way. First, when 2 or more spikes reach and reverse at nearly the same level. Here as well with 3 rejections around the same level. 2. When there is a single significant spike, then I place a level at the extreme of this specific spike. Fifth element, follow the trend using the Dow theory. When price create higher highs, like right here, 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 and higher lows, like here, 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 price is in an uptrend, and we want to buy. In a downtrend, it is just the opposite. You want to go with the trend. This will improve significantly the power of rejection of any level of support or resistance, then it will improve your win rate and make you profitable faster. For more in-depth explanation of this concept, you can check out my previous video dedicated to it. Sixth, several bounces from the same level makes it stronger. When price rejects a level or an area for 2 times and more, it makes this level stronger. Back to AUD/USD monthly chart. Here you can see price rejected this area 2 times, and the second time it started a big trend. Then when price comes back to it, there is a huge rejection. The move made 850 pips. Here price rejected this area 3 times. Then when price comes back to it, a huge rejection, 360 pips were made. Join my Telegram channel to follow my analysis and copy my trade, link below. 7. Putting all together. Let's look at some charts now applying those concepts together. First, from the vertical line until now, price is in an uptrend. Second, we search then for a nice support level because we are in an uptrend, we want to buy. Then, a monthly candle closed clearly above the level of support. Now let's switch to the line chart. Third element, we place the level from the line chart. And we choose the most recent swing low when we look on the left near the actual price action. Back to the candlestick chart. Fifth element, we look where the price reacted 2 times minimum. And sixth, finally, we time our entry going to the 4-hour chart. So here is the 4-hour chart. We see that when price touched the level, it made an engulfing candle, and then there is eventually also a W formation. We can enter at the engulfing level or at a retracement in it. Then we have our stop loss of 39 pips. And then price went all the way up to 360 pips, which means 9 times our risk. It could have been an 18% profit if you place 2% per trade here. Other example, GBP USD from the monthly chart. So from the vertical line, the price is in a downtrend. Then we search for a nice level of resistance. Since we are in a downtrend, we want to sell. Then we make sure that the monthly candle closed below the first level that we found. We switch on the line chart and we place the level from the line chart, where price reacted 2 times minimum. We are back to the candlestick chart, and on this chart we can also see that it is confluent with the extreme of the spike on the most recent swing high. And finally, we go to the 4-hour chart to time our entry. The first time come back to the level, let's zoom in. Right here we can sell, we have an engulfing candle. Our stop loss would be 62 pips, and the price went all the way to 550 pips. This trade would have made 8 times your risk, which means eventually 16% of your account. Eighth element, entry and target profit. Once you draw your level, you will always need a price action confirmation to enter your trade. I will show you now a trade we took 2 weeks ago in my Telegram Signal group. This is Odd New Zealand monthly chart. From the vertical line, price is in a downtrend. We search then for a nice resistance level we want to sell in this downtrend. A monthly candle clearly closed below the level of resistance. We switch to the line chart. We place the level from the line chart, where price reacted 2 times, one as a resistance and several times as a support. Back to the candlestick chart. We choose the most recent swing high near the price action. Then we time our entry on the 4-hour chart. Here we are. So in the signal groups, a pattern was validated, and then we entered our trade at this level. Our stop loss was 24 pips, and the price achieved 156 pips, which means 6 times our risk. Imagine for a second someone who can show you the perfect road to become consistently profitable in trading. Learn the routine and mindset of the top 5% traders. Imagine replacing your full-time job by watching the chart just 30 minutes per day wherever there is an internet connection. See yourself trading a strategy that is adapted to your psychological sweet spot and you feel good applying it. This strategy does not require you to stare at the charts all day. Aside, take advantage of the market by focusing 10 minutes 3 times per day, so that you have enough time to do what really matters in your life, whether that is hobbies, relationships, or spending time with your family, while you still get 10 plus trades per week. And finally, never lose your own money. I will teach you the right way to master any strategy without losing money. And once your skills are ready, I will introduce you to different ways to get money to trade with, not your own, and still be able to get the profits out of it. Thanks for watching this video. I wish you success.